Good morning, it's Monday the 11th of October and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll give you a quick summary of the macro data points from around the world to expect over the week, and we'll then look in more detail at some of the bigger stories straight afterwards. So, stay tuned. So, let's take a look at the economic numbers being issued this week. And starting on Tuesday, we'll hear the International Labour Organisation's unemployment figures, which we'll talk more about shortly, the ZEW Eurozone and German economic sentiment, and the job openings and labour turnover survey over in the US. On Wednesday, we'll get the latest China trade balance figures, the German CPI final numbers, the UK GDP 3-month average, and over in the US, the CPI numbers and the Federal Open Market Committee minutes, and we'll talk about both of those key numbers in detail in a moment. On Thursday, we'll hear the Australia consumer confidence numbers and their employment change numbers. In China, the latest inflation figures, the US jobless claims, the PPI figures also over in the US, and the EIA crude oil inventories. And on Friday, the Eurozone balance of trade, and in the US, the Michigan confidence and their latest retail sales figures, which we'll also discuss in a moment. And the companies that we'll hear updates from this week are as follows. On Monday, we'll hear from XP Power. On Tuesday, Entain and LVMH. On Wednesday, the national house builder BARRATT, and we'll talk more about them in a moment. Page Group, and over in the US, JP Morgan, and we'll also talk about them in more detail shortly. On Thursday, the retailer ASOS will release final year results, and we'll take a look at those shortly. We'll also hear from Ashmore, Dunelm, Hayes, National Express, Citigroup, Wells Fargo, and Bank of America. And finally, on Friday, we'll hear the third quarter results from Goldman Sachs over in the US, and do stay tuned as we also take a look at their announcement in more detail. So, US earnings season kicks off with the banks this week. Earnings will be more in focus than ever as expectations are for growth to have slowed across Q3. Cost pressures will be under the microscope as labour costs and energy costs rise. In addition to earnings, cost pressures and inflation, the ongoing energy crisis will be another key macro theme. High energy costs raise inflation, putting central banks under pressure to tighten policy, even if growth is slowing. So stay tuned as we take a look at some of this week's key stories in detail. On Tuesday, we'll hear the latest International Labour Organisation employment figures. Now, the UK labour market has continued to show signs of improvement over the past few months as businesses reopened following the pandemic. The ILO unemployment rate declined to 4.7%, even as furlough continues to wind down. In fact, job vacancies rose to over 1 million. And this is evidence of a supply-side issue rather than demand problem, which could mean that wages are set to rise further. Wages rose from 6.6% to 7.4% excluding bonus, which is significantly above inflation. Labour shortages and rising wages are set to continue in the coming months, with few signs that this dynamic will ease. This could create a problem if companies decide that the higher wages are not conducive to further growth and take their foot off the gas. So as a result, keep an eye on the UK indices and, of course, the GB pound. So on Wednesday, we'll hear from the national house builder BARRATT. Now, revenue at BARRATT Developments was slightly above pre-pandemic levels at full year, thanks to not only a higher number of completed properties, but also higher property prices. Even so, operating profits were 10% short of pre-pandemic levels, reflecting rising costs and COVID loan repayments. Inflation is a key theme currently, with management already having previously highlighted it as a headwind. With cost pressures expected to remain elevated, but post-pandemic pent-up demand easing significantly, the picture could turn rapidly. Forward sales will also be under the spotlight, particularly as comparisons get increasingly difficult. Even a small growth in profit margins could be worth a cheer. So over in the US banks are due to report this week, with ballooning costs and questions over loan growth in focus. The cost outlook at bellwether JP Morgan have already been raised multiple times this year, amidst rising pay and technology spend to compete with fintech challenges. However, earnings are likely to be propped up by wealth management fees and record deal making, as well as the rising credit card fees. Attention will also be on loan growth, which is expected to start ticking higher. Although net interest income is likely to remain depressed thanks to the historically low interest rates. Expectations are for earnings per share of $2.99 on revenues of $29.7 billion. The whisper number is $3.19. So also on Wednesday, we're going to hear the latest US CPI figures. So has the US reached peak inflation? It seems unlikely given the continued rally in energy price, a move which is prompting speculation that the rise in inflation could well be less transitory than originally expected. The Fed could find itself between a rock and a hard place if inflation remains high and growth looks to slow. The August CPI reading saw inflation tick low to 5.3%, down from July's 5.4%. Whilst this was a tick lower, it certainly wasn't sufficient to prompt a rethink over the direction of inflation. Meanwhile, core inflation slipped from 4.3% to 4%. Whilst another move lower would of course be very welcome, it is by no means guaranteed. And finally on Wednesday, the latest Federal Open Market Committee meeting minutes will be released. And in the latest FOMC statement, the Fed said that if progress continues as expected, the FOMC considers that a moderation in the pace of asset purchases may soon be warranted. Now, Fed Chair Jerome Powell went on to imply that an announcement could be made as soon as November. The October NFP was very weak for a second month running, but that is unlikely to stop the Fed tapering by the end of the year. The market is now shifting its attention to interest rates and when that first rate hike could be. The minutes will be scrutinised closely for comments on inflation. Since the last meeting, energy prices have picked up further since the meeting, but at least the minutes will give an indication of what the level of concern was. On Thursday, ASOS will be releasing their full-year trading figures. Now, the share price has headed southwards some 40% over the same period. Q3 results failed to impress the market as poor weather conditions impacted trading in the final few weeks of the period. Q3 sales were still up 21% year on year, but this wasn't enough to appease the market, particularly given declining margins. Since then, social events have likely picked up, boosting demand for new outfits. That said, things are still a long way from back to normal. Attention will be firmly on supply chain issues and to what extent these are hindering ASOS's ability to meet recovering demand. Changes in active consumer numbers will be under the spotlight. These stood at 26.1 million at the end of June. Meanwhile, net cash was at £90 million after a busy year acquiring Topshop, Topman, Miss Selfridge and HIIT, all for $265 million. So on Friday, we'll hear the third quarter financial results from Goldman Sachs. Now, Goldman Sachs had a solid Q2 with revenues well above forecast at $15.39 billion. Whilst trading revenue slowed, this was offset by investment banking revenue, which surged 26%. In Q3, merger and acquisition fees are expected to be high amidst a record boom in deals as global M&A activity hit an all-time high in Q3, as cheap financing drove those sorts of deals. As with other banks, costs will be in focus at Goldman Sachs. However, the bank does appear to have a better grip on costs than its peers. Expectations are for EPS of $9.70 on revenue of $11.51 billion. The whisper number is $12.34. The stocks hit an all-time high in late August at $420. It currently trades 6% off its all-time high. And finally on Friday, we'll hear the latest US retail sales figures. To say that US retail sales have been volatile would of course be an understatement. In September, retail sales rose 0.7%, defying expectations for a 0.7% decline. In July, retail sales declined downwardly, revised 1.8% versus expectations of an increase. Consumer spending appears to be rather subdued recently, and following a weak jobs report both in August and September, perhaps softened consumer spending isn't so surprising. The Delta variant of COVID, in addition to disruptions from tropical storms, appear to have played a role in depressing sales. Retail sales are expected to come in at 0.2% down, so keep an eye on the US indices and of course the US dollar. So to wrap up, let's take a look at the dividends for this week. In the FTSE 100, we'll hear from WPP, Tesco, Spirax-Sarco Engineering. And in the FTSE 250, we'll hear from Howden Joinery Group, NCC Group, Close Brothers and Primary Health Properties. So that's what's to look out for this coming week. Don't forget to look out for our rundown every Friday morning, where we take a look at what's happened in the markets over the week with our own thoughts and analysis. Also, don't forget to check out our app, which you can download from the App Store to your mobile phone, which gives you a whole host of useful functionality, including the latest financial news, as well as monitoring your open positions. And of course, why not subscribe to the channel to make sure you get to hear the moment we release not only our regular bi-weekly reports, but also our special market reports as they are released. So, until Friday, from all of us here at Atlantic Capital Markets, have yourself a great week.